Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is September 2nd. Quebec-based company Falco Resources has had a successful 2024. The gold-focused explorer and developer caught the eye of the Red Cloud research team, earning a spot in their coverage lineup. Alina Islam, Mining Analyst, takes the stage this week as she provides details on the news. So with that, Alina, what's top of mind for you?
Thanks for the introduction. Hi, everyone. Last week, we initiated coverage on Falco Resources with a buy rating and 75-cent target price. This is FPC on the TSXV, and Falco is a banking client. So Falco, they are one of the largest claim holders in the Roundup mining camp of Quebec and are focused on advancing the Horn 5 gold, silver, zinc, copper project. Now, this is a past-producing asset that was operated by Noranda Mining from the mid-1920s till the mid-1970s. And over its life, it produced about 11.5 million ounces of gold and 2.5 billion pounds of copper. The deposit was mined to a depth of 650 meters and was acquired by Falco in 2012. Since then, the company has completed exploration work and has confirmed that the deposit actually extends for an additional 1 kilometer to a depth of at least 2.6 kilometers below surface and contains 6 million gold equivalent ounces in 2P reserves and 9 million gold equivalent ounces in measured, indicated, and inferred resources. So feasibility study was also completed for the Horn 5 project in 2021, and this outlined a 15-year operation producing an average of 200,000 ounces of gold per year, which demonstrated an NPV at 5% of 974 million Canadian dollars and an IRR of 19%. So the study did use conservative prices of $1,600 an ounce for gold and $21 an ounce for silver. And initial capital here was estimated at about 1.1 billion Canadian dollars. So we like the Falco story for a few reasons. First, since it's a past-producing asset, it has access to infrastructure facilities. This includes an existing shaft that will be used to mine the deposit, as well as an existing tailings facility located 11 kilometers away. And then Glencore's Horn Copper Smelter, which is the only copper smelter operating in Canada, is located right next to the project. And there's actually an agreement here for Glencore to process the copper concentrate from Horn 5. Second, permitting for the project is well underway as its EIA has been deemed admissible. And the project is now going through the BAPE process, which means we could see permits approved as early as next year. Third, and I kind of alluded to this earlier, but offtake and stream agreements for the project are in place. The offtake agreements are with Glencore for its copper and zinc concentrates, and the stream agreement is with Osisko Royalties for up to 180 million Canadian for refined silver. So essentially, with these agreements in place, the company fully maintains its exposure to the gold price, which we view positively in this environment. And then the last reason I'll point out here is that Falco has a very strong shareholder base and an experienced management team, which we believe will be key to getting them through the permitting and funding phase, which is coming up next. A third of the company is held by Osisko Development, Sprott Asset Management, and Investment Quebec. And I won't go into the details of the team here, but several of them have experience with the development and operation of the Canadian Malartic gold mine. Just touching on our valuation for Falco, we use a DCF valuation and assume production starts in 2031. This accounts for dewatering of the old workings, which could take up to 3 years, and then rehabilitation of the shaft and construction, which could take up to another 2 to 3 years. Most of our assumptions, they were derived from the feasibility study. However, we do increase capital and operating costs by 15%. So our capex spend is estimated at 1.25 billion Canadian and all-in sustaining cost net of byproduct credits at $630 an ounce. So assuming a gold price or a long-term gold price of 2000 US dollars an ounce, our NAV for the project is 726 million or 96 cents per share. We do have a sensitivity table in the report that's published on our research portal, so you can see how the NAV per share changes under various gold prices. But with gold currently trading at around 2,500 US dollars an ounce, we believe this provides plenty of upside to our valuation. So this is a complex project. It is a deep underground mine with grades at 2.2 grams per ton gold equivalent. So we do apply a 0.8 times multiple to account for the technical and execution risk at the project. Just on upcoming catalysts, we have two major ones to look forward to. First is permit approval. And the project does sit on the border with the city of Rouyn-Noranda, so we could see this take slightly longer than expected. And then the second is financing, and with the capex spend for this project budgeted at 1.1 to 1.2 billion, this is quite large. So we do expect management to consider all scenarios to help fund the project, including looking at potential JV partners. So in summary, we have initiated coverage on Falco with a buy rating and 75-cent target price. We believe this project is located in a good jurisdiction and the company has a strong shareholder base and management team. And with gold prices rising, we believe investors should be paying attention to this restart story in Quebec. And that's all I had. Thanks for tuning in.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into recent notable mining news. Remember, you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com to read all the research reports discussed, for all Red Cloud Securities free research reports, and to sign up to our email list. That's it for this episode, and see you next time.